Hi, everyone. Welcome to the Future of Finance podcast, where we break down investment strategies to help you live a better financial future. I'm your host, Marissa Wood, financial advisor and one of the owners of Union Financial Services. Let me start by asking you a question. If something happened to you tomorrow, are you 100% confident that your money, home, and your family would be protected in the way that you want? Well, today I'm sitting down with estate planning attorney Fernando Ramos from North South Law to break down what really happens after you pass, the mistakes that could cost families thousands, and how to make sure that your loved ones are taken care of. But before we dive into that, I would ask you to please subscribe to our channel, whether you're watching on YouTube or your favorite podcasting app. It really does help us. So, Fernando, thank you so much for joining us today. Fernando's a former law enforcement officer and currently one of the owners of North South Law, the best estate planning law firm in all of Florida. Now, Fernando, what made you go into estate planning? Tell us a little bit about yourself.
Sure. Thank you for having me. So I appreciate that. Wasn't really planned out. I did my career in law enforcement and retired and had the law degree way before that. And all of 2 or 3 days being at home, my wife's like, "Nope, get out of here. Go follow your passion of being a lawyer now." And that's what we did. And we really got focused on how can we help others? What kind of practice can we initiate? When I say we, my partner and I, who was also a former law enforcement officer, we decided that estate planning would be a really good launching pad to help others and continue our service.
Mm-hmm. Now, I think when most people hear the term estate planning, they think it's only for the ultra wealthy. What do you think about that?
No, totally disagree. You have children, you want to have a plan for your children. You have older parents, you want to make sure that their advance directives are taken care of. You're growing your net worth and wealth. You certainly want to make sure you plan for that. So it can be all of the above.
So anyone with family they care about,
Absolutely.
an asset or two?
Yeah, family, especially young children, you want to make sure that however you want those assets to be managed for your children, that you set those guardrails, and we set them up early to make sure, because we never know. We never know when the unexpected can occur. So those that say, well, I'm not rich enough or it's too soon, not a good thought. You should always be thinking about taking care of your family.
Absolutely. And there's some celebrities famously that did not have an estate plan. And it always blows my mind when I read these articles or I see news stories on celebrities like Prince.
Yeah.
Larger than life, had so much money. His estate was something like $150 million. And he did not have an estate plan. And that estate was tied up in court for years. Tons of money cost, tons of time cost.
Right.
His family probably went through so much stress.
Yeah, I mean, him and everybody else. One of the things that impact probate is it's public. So regardless of whether you're Prince or just anyone else, it's going to be public information, which also opens it up to creditors. So if there are creditors out there, they know it's basically a billboard saying, "Hey, there's money here, come get it." And guess what? Creditors get in line first before any beneficiaries. So even in someone like Prince's case, where we know there's a significant amount of assets, family members can't touch it. They can't get access to it until this whole probate has gone through. And not to mention if it becomes adversarial. So, that'll develop some more complexity to it and certainly cost. So
what is probate for those that don't know?
Yeah, probate is the state's estate plan for you in case you don't have your own estate planning plan. So in other words, that's the process where beneficiaries and loved ones would have to go through in order to access whatever assets were there left by the decedent, the person who passed away. It's a whole court process that can take anywhere from a year and more and cost substantial amounts of money. I can certainly dive deep into what Florida law requires, but you're looking at anywhere from a year to 2 years on an average basis. You're looking at 3% paid off to attorney's fees at a minimum, 3% going to the personal representative, and then whatever's out there that's owed to creditors. So you're really opening yourself up for a can of worms on that one.
Yeah, so the family is going to end up with way less in a lot more time.
Correct. And if there are minors, even more complicated because minors cannot inherit directly. So that brings in a whole nother level of complexity to it as well.
Okay, so everyone does actually have a plan. It's just not their plan. It's the
state's plan. Correct.
And
Correct.
that might not be a good one.
Not necessarily, not in my opinion.
Okay.
Costs are just surmountable as far as what it the funds that would take to go through a probate versus an estate plan.
Tell
It's
me
night and
about
day.
those costs. Like, give me an
Yeah.
example.
So think about an estate worth $1 million, which is pretty easy to get to with a life insurance policy, with no up-to-date beneficiaries, or with a minor as a beneficiary.
Real estate.
Plus like a 401k retirement. So you can easily, get to $1 million. That's 3% on attorney's fees. So that's $30,000 right there,
Wow.
right? And then whoever the personal representative gets appointed, they can charge up to an additional 3%. All right, so that's $60,000, not to mention creditors, if there are any out there. So it adds up pretty quick.
Versus an estate plan
Yes.
is what, a few $1,000s?
A few $1,000s, certainly nowhere near as much as that.
Wow.
Yeah, and then you can it can be drafted appropriately to avoid that headache and avoid probate. Certainly.
Yeah, that's huge. And I mean, I think a lot of people think, well, if I just handwrite a will, then that's, I'm telling people where I want my money to go, and should that suffice? I know a famous person, Aretha Franklin, she had a bunch of handwritten wills, which actually created more chaos than anything because there was multiple, and the will is really not a legal document, correct? Or is that that a misunderstanding?
The will, you can write one yourself. You can even write it on a napkin. The problem is that that's not going to avoid probate. The only thing that's going to avoid probate is having those assets in a trust. So you can have all the wills you want, and it can be as fancy as you want it to be, but at the end of the day, a will has to be submitted, and that will guarantee an initiation of probate in the state of Florida. So, and then the complications occur when you have multiple wills and you can't tell what's the most recent. And if there are if there's not notarized, or if there's no witnesses, then it even complicates things further. So, if you're looking for probate avoidance, then a will is not that answer.
Okay. So what is the difference between a trust and a will?
Yeah, and that's it. That's it right there. Significantly, think about it as peanut butter and jelly. They're both good apart, but together they're even better.
Yeah.
So when you add a will to a trust, now you've taken care of it 360. So a will in that scenario acts as a backup in case whatever you put in your trust either slips out or you forgot. So I'll give you an example. We create a trust, and then we create a will. You have your home in a trust. You have your bank accounts as the trust being the beneficiary of those bank accounts. But let's say down the road, you create a third bank account and you don't have a beneficiary. So in that scenario, the previous accounts and the home, they're covered through probate once one passes. But that third account that you forgot, well, they never went into the trust. The trust is not the beneficiary. So now the will kicks in, and the will determines, all right, well, they had a spouse, and if the spouse predeceases them, they had 3 children, it goes to the 3 kids. But that process to get to the 3 kids would initiate probate. But at least there's direction as to how you want it to go and who you want it to go to. It's not ideal. You would rather have it in the trust. But at least if there's a will, it covers the directions on where to go. The problem is you're going to have to go through probate.
Okay. So, in the event that there's some holes in that bucket of water, you want to have the safety net below it, or, an extra
peanut butter and jelly.
Yeah, peanut butter and jelly. That's great. Now, something that you and I have discussed previously is that there is so much money in the U.S. currently that is unclaimed. How much did you say that was approximately?
Well, in Florida, there's over $2 billion.
Wow.
Nationwide, there's over $50 billion. And, what's the source of that? you know, I don't know where all the sources are, but I can tell you that more often than not, it's that small bank account that you didn't disclose it, didn't have a beneficiary form for it, you pass, and then it's just there unclaimed, and your loved ones don't even know about it. They don't even know how to initiate the search. Those 401ks that we bounced around and jumped from job to job back in our 20s and 30s, and it's only 2,000, it's only 3,000, you forget about them. Well, they add up to $2 billion in Florida. So those virtual bank accounts that people have to buy stocks and what have you on their apps, that's another source. So you start looking at that, and you pass away without an estate plan. You never shared that information with your loved ones. They don't even know what they don't know in this scenario.
That's a great point. And how terrible that is, and probably so common. I bet you, and that's one of the reasons we always recommend 401k rollovers, and consolidating all of those, what you deem as small accounts, really can add up over time. But consolidating those into an IRA, an individual retirement account, or your current 401k plan, and having an advisor help with that, because we can update your beneficiaries. We can have that organization. We can be there to help your beneficiaries if and when the time comes and you pass.
Correct.
We have that organization. We can help them claim those assets.
Yeah. Let me add something too. So recently, I've been working on a probate, and it's been now a year and 4 months. And it was a simple CD that an individual had. He had his spouse as the beneficiary. Spouse passes before him. He then passes, never updating the beneficiary. He had a trust. The home was in a trust. But unfortunately, in that scenario, he forgot about that, that one account. And it wasn't a small amount. It was a 6-figure account. So now we're dealing with probate, when in fact, had he updated his beneficiary form to have the trust as either the backup beneficiary or the primary beneficiary, then the family would have avoided that.
So he had someone deceased listed as the current beneficiary.
And that happens more often than not. People forget, right? That account, that was a CD, it was probably opened 20 years ago.
Okay.
And at the time, it was him and his spouse. Spouse passes. He never thought of updating that. Maybe he just didn't get around to it. And fast forward, now he's passed, and the family members are just waiting. It's been a year and 4 months waiting to be able to access those funds through probate.
And that's a real problem, because what if those family members have expenses to keep paying for? If it was a family home, they have the mortgage, they have bills that don't stop just because probate's taking a long time.
Or they pass.
Oh boy, then it really gets
then it
messy.
gets even more complicated. Right.
Yeah.
So all of these things can happen. So my advice to folks is, that's great that you have a loved one as a beneficiary, but unfortunately humans fail all the time, right? We pass away, we become incapacitated. Trust is always there. The trust will be there to catch, whether it's, like I said, whether it's primary beneficiary to these accounts or secondary beneficiary, but you should at least have that to serve as a backstop so we avoid these headaches, because it could have easily been avoided.
Absolutely. So if you're listening to this and you're thinking, I don't even know if I have beneficiaries listed, especially on bank accounts, that can fall through the cracks a lot because it's not an automatic part of opening the account. You have to ask for, they literally call it a TOD, transfer on death form.
Right.
And ask for that. If you don't know if you have it already, maybe go to your bank, call up your bank teller, and make sure you have at least a beneficiary listed. And then once you do open a trust, you can change that beneficiary to the trust. So something to keep in mind. And we'd be happy to review your beneficiaries with you as well on any investments or 401ks that you have. You can just go to union-financial.com, click schedule a meeting. You can book a call, Zoom call, in-person meeting, and we can review that with you and also introduce you to Fernando. Now, another part that we really wanted to discuss, and it's so important that most people overlook, and that is the guardianship and planning for your children. I mean, if we're talking celebrities, Paul Walker, he actually left everything to his daughter, but a custody battle drama ensued. And, money is one thing, but guardianship is another. making sure your loved ones are taken care of. So let's talk about naming guardians.
Yeah, that's one of the biggest mistakes people make is two things. One is they have that life insurance policy. They have whatever those assets are, and they say, well, when I pass, I want this to go to my kids, and their child is 5 years old. Well, that's a problem because in the state of Florida, minors cannot inherit directly. So in the event that something happens while that child is still a minor, then now not only do we have probate, we have guardianship. So we have to appoint a guardian, which also costs money and adds another layer of headaches to the whole process. And unfortunately, as soon as they turn 18, they get an outright distribution.
Wow.
So think of an 18-year-old kid or child still inheriting fill in the blank, whatever that is at 18 years old with no directions. All right, judge hands it over and now it's yours. So that's a significant issue. The other problem that I see mistake is when families have minor children, they say, well, if I pass, I want my sister or my brother to inherit all of this to take care of my kids. Well, where does it say it in writing that once your sibling takes that money or that insurance policy, that they actually have to take care of your children once you're gone? Nothing. There's nothing in writing.
Yeah, we're just assuming.
You're assuming. You're hoping. You're hoping for the best. But who's the beneficiary? It's your brother. It's your sister. It's your loved one, not your child, with no guarantee that they're going to take care of the kid the way you want.
Or maybe they get remarried to someone
Correct.
you don't even know.
Correct.
They have no obligation to you.
Right. Yeah. So you're exposing yourself significantly that way.
Okay. So naming guardians is so important. And I always think about, too, that series of unfortunate events. It was a book series, and then it was TV and a movie. And it scared the daylights out of me when I was a kid watching it. I remember going to my parents and saying, do you have guardians named for me? And what happens if you guys go on vacation and your flight goes down? I mean, God forbid,
Right.
But as a child, I was like, oh my gosh, so many bad things can happen when parents don't plan properly and everyone's too busy, and they'll get it done after that vacation. They'll get it done after they renovate the kitchen, and it's just never top of mind. And that's so irresponsible as a parent.
So you bring up a couple good points. You mentioned what's the difference between a will and a trust. Well, that's in the will is kind of where you identify your guardian.
Okay.
If I pass away, my money goes here, my tangible personal property goes there, and this individual is my guardian for my minor children. But what if you don't pass away? What if you're just incapacitated for the next 3 months? What if you just went out to lunch and don't make it home to be able to pick your child on time, and you and your spouse, or if you're a single parent? The will doesn't cover that. The will only covers if you've passed away. So where a lot of estate plans fall short is in that scenario where people have a false sense of security thinking that in my will, I've identified a guardian. But that's only if you pass away. So we try to do something that goes a little bit step further and focus on that, as well as what happens if I'm just incapacitated, if I'm out and no one can pick up my child from daycare or from school. So we kind of come up with a kids protection plan to ensure that there are no gaps. You have a temporary guardian, someone that can immediately respond, such as a first responder, that we've identified that individual in our documents, notarized, that they can go and pick up that child. Maybe the permanent guardian is in Sarasota or somewhere further south, or just not, a couple hours drive away. They can't respond immediately. They'll come in after and they take over. So we have layers.
So temporary, that's very smart for especially out of town permanent guardians. That is probably something that most people have not thought of.
Correct. Yeah, this is something that, throughout the past few years, we've started seeing that, no, we see these gaps here. The will covers upon death, but what about someone's incapacity? What about someone's just not available to respond right away? So we wanted to make sure that we cover those gaps for our clients.
And that's called the Kids Protection Plan?
Yes, ma'am. Yeah, we so that kids protection plan covers that first responder, the temporary guardian, and up to permanent guardian, and it's a series of documents that we provide to our clients with their estate plan, so that they can share that with their school, with their kids, with their first responders, so that they know that they've selected them. Obviously, I hope they've had those conversations prior, so that there's no gap.
Okay.
So we want to avoid those gaps.
So what does that look like when someone does visit with you and becomes a client and has now their estate plan, their kids protection plan? How do they distribute it? What should they do with those documents? Should they have digital copies, paper copies?
Right.
Where should they keep them?
Yeah, we provide kind of it looks like it's not bulletproof, but it's a waterproof and fireproof briefcase with all the documents, and we call them. Always keep the originals there. I always recommend that people share copies with their loved ones, with the school, the kids protection plan, obviously with the school, so that they have those on record. Your medical professionals on your advance directives, which includes your healthcare surrogate, guardianship, living will. So I actually give instructions on what each document is, what it does, and who should have a copy of that. But always keep the originals. For example, the will and the trust, you need those originals, because if we ever end up in probate, those are the documents that need to be filed. The trust doesn't get filed in probate. A certificate of trust does, but the will does if we ever have to go to probate.
Okay. That's really good to know, because I think that might be something that holds people back from even taking that first step, is I don't know what to do with it once I do have it. So if you guide them through that, that's amazing.
Yeah, we guide them through it, and we also provide funding instructions on how to fund the trust. What does it actually mean? How do you fund the trust in certain ways? You put, for example, bank accounts. We will put the beneficiary as the trust, or we can actually have the trust be the owner of the bank account. So that's one way. The most common way to fund the trust is through your home. So once you've bought a home, you can deed the property into the trust. And now the trust is funded. The trust owns the home. You no longer own the home directly, thus avoids probate in the state of Florida. Simple as that.
Brilliant. So if someone has children but is not sure if they have any of these items taken care of, what would be the first step that they should take?
Yeah, well, I would certainly recommend that they have a conversation with their spouse, if they have one, and then start thinking about an estate plan. Whether even with or without children, you want to make sure that you have that plan. And, these plans, in my opinion, should grow gradually as you grow. Maybe at the beginning, less assets, maybe a trust isn't necessary, but you should certainly have a will, and you should certainly have your advance directives. Once the kids come around, now you definitely should be thinking about that trust, because that's where we're going to guide those funds for the benefit of our children in the future. And we can set it up to the point where your child can have their elective shares protected from future creditors and future ex-spouses. So that's a big deal. We want to make sure that they're protected today and beyond.
Yeah, that is true. How long does the typical process take? How many meetings is that? Do you do virtual? Does it have to be in person?
All of the above. We can certainly meet virtual. I prefer to meet in person. I think that develops a level of comfort between the client and ourselves. And we can really break it down and show it on the board what it looks like. So I like to draw diagrams. And typically you're looking at about 3 meetings. So we have our first meeting, our first consultation, figure out what exactly, based on your circumstances you need. Then there's an interview that we go through to make sure that we've identified any and all assets, create an inventory. Most people don't have that inventory. Think about that $50 billion, unclaimed funds.
Wow.
That's where we get to identify everything that we have, so we can avoid that. Right, so it'll be the most organized inventory you've ever had on your finances. Once we get through that, then we start drafting. So 3 meetings. On the third, we meet in person. We get everything signed up and ready to go. And typical process is anywhere between 2 to 4 weeks.
Okay. That's not too long, considering it could be a lifetime of peace of mind and family being taken care of.
Yeah, and what I'll add is this is not the type of document, in my opinion, that you should set it and forget it. This is something that you should be dusting off and looking at on a regular basis because things change.
Mm.
Beneficiaries pass away,
Mm.
children become adults, and they can certainly now be more involved in your estate plan. They can be personal representatives as well as beneficiaries.
Okay.
They can help with the advance directives on and so on and so forth as they get older. So once you do it, you should not just put it away. You should certainly be looking at it at least once a year.
Yeah. Yeah. It's a shame because I think you'd probably agree with the fact that you work in an industry where it's never important until it's an emergency. And I'm sure you get so many panicked calls. And I've seen it before too. Mom or dad is now in the hospital and needs to go into a nursing home, and we never did that power of attorney. And we don't have the advance directives done.
Right.
And it becomes a crisis situation because it wasn't done ahead of time. And so for anyone listening, it's not only if you have children of your own, but if you have parents that you want to make sure are taken care of and not taken advantage of, and you want to be able to help them age in place or age gracefully,
Mm-hmm.
and you want to be involved in that process. And selfishly, you want to make sure that their assets are
Protected.
and you're
avoiding
beneficiary probate. And you're avoiding probate. There's
Yeah.
so many layers to it. So it's not only if you have children, but if you have parents as well, if you have a home, don't let it get to the point of crisis. Plan ahead of time.
It's funny. I have a client right now who they're going through probate because I mentioned the scenario earlier. The dad passed away and didn't update the beneficiary. Excuse me. Well, guess what? This is an older couple as well, and they don't have an estate plan. And they just shared with me some sad medical information on one of them. And I asked the questions like, are you prepared? Have you taken care of? Like, no, we haven't. Like, you would think that after you're going through probate because of your one of your parents passed away, that they would be on top of that because it's been over a year and it's been costly, the probate. Well, guess what? They have not. They have not prepared their estate plan yet.
It's not surprising.
So we agreed that we're going to be meeting soon, so at least we can have that conversation because the medical prognosis wasn't great. And now is the time, because if you get to the point where there's an incapacity, you can no longer sign those documents. And now you're stuck going through conservatorship or guardianship in the state of Florida, which adds even more complication to your probate. So let's take care of that now while we can.
Yeah, let's get it done. And for anyone listening, Fernando's so great to work with. He's a father of 4, truly compassionate, explains things in such a nice way. We have referred so many of our clients to him, and he's always taking good care of them because it's an emotional conversation, but it has to get done. If you have loved ones that you care about, let's get this done. Let 2026 be the year you have your house in order. Fernando, anything else that you wanted to add that you think should be a call to action to any of our listeners?
Yeah, I think that the hardest part is scheduling the appointment, right?
Mm-hmm.
Once you sit down, you realize, okay, it's not as complicated as I thought. It's not as scary as I thought.
Mm-hmm.
And I'm not going to die when I walk out of the room just because I did my estate plan. Unfortunately, there's a lot of folks that think that way, that I'm bringing this on me if I do this paperwork, so let me just ignore it.
People think that about life insurance too.
Exactly.
I'm going to die as soon as I get life insurance.
Exactly. So I would submit that for those that have that having that thought in their head, reach out. Let's have a conversation. Our job is to educate, and then the client will leave much more informed, and they can make their better decisions for themselves.
Yeah. And we do educational events as well.
Correct.
We have one coming up. This episode might be posting after we had it, but we're probably going to do it a lot in the future too.
Right.
So if you want to learn more about the kids protection plan
Mm-hmm.
and some estate planning, we are constantly doing fun events, whether they be lunch and learns or happy hours. If you have interest in that, reach out to us and we can give you our schedule of upcoming events.
Yes. Yeah.
So thank you again,
My
Fernando.
pleasure.
If this conversation made you realize that there's gaps in your current plan or you don't know what you don't know, let's not wait. We'd be happy to connect you with Fernando Ramos to get your kids' protection plan, will, estate plan set up. And if you have specific questions about your investments as well, want to make sure that your money's not part of that 50 billion unclaimed assets, all you have to do is go to our website, union-financial. We'd be happy to have a conversation with you, whether by phone, Zoom, or in person. You can click schedule a meeting and it'll bring you right to our personal calendar. And if you found value in this episode, please make sure you're subscribed and share it with someone you think might need to hear it. Fernando, thank you again.
My pleasure.
This topic is one of those that might not seem exciting on the surface, but it can change a family's life.
It has to be done. Absolutely.
Yeah.
Well, thank you again. Appreciate your time.
Absolutely.
All right.
And thank you everyone for tuning into another episode of the Future of Finance podcast. I'm your host, Marissa Wood. We look forward to helping you live a better financial future. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Union Financial Services are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. The opinions expressed by Marissa Wood and guests on this show are their own and do not reflect the opinions of this radio station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risk and otherwise stated are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it's suitable for your specific situation. This program is designed to provide accurate and authoritative information with regard to subject covered. Index or fixed index annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charge as described in the annuity contract. Guarantees are backed by the financial strength and claims paying ability of the insurer. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.